Hello, this is Cynthia Fick, and this is the August 18th stock market update. Well, did you know that while you were sleeping last night, the US debt clock hit $40 trillion, and this sent off a huge rise in interest rates, with the 30-year Treasury being up to the highest we've seen since 2007. So today the market is down. So you may be asking, what is causing this sell-off? And it's very similar to what we've been saying over the last few months. A big part of it can be blamed on the potential escalation of the war with Iran and oil prices. And then we have bond yields that are going up and could make investing in bonds look more attractive and pull money away from the stock market. As we've discussed many times over the last few months, there's also the threat of the Federal Reserve having to raise interest rates this year because they have not vanquished inflation. And the market just would not like that. So on top of that, we have the midterm elections happening this year in November. And pretty much this year, there's a playbook for midterm election years. And this market has almost exactly done it play by play. So again, as we've been saying for a few months, we face a lot of headwinds. So I guess to me, the bigger question is, why does the stock market continue to go up at all? And the answer to that question is its fabulous earnings momentum. The S&P 500 has shown the first quarter and the second quarter of 2026. The earnings for the S&P 500, they're the top 500 companies in the United States, were up 18% year over year from 2025 in the first quarter of 2026. And then they were up 27% year over year in the second quarter from 2025. So just an amazing escalation in earnings. And, these are just unheard of, and kind of quell the fear that the stock market had that all the expenditures that some big companies were spending on AI infrastructure are actually showing the results in their earnings. Earnings are already increasing because of the productivity that is expected from artificial intelligence. So that's kind of what is driving and fueling this market upswing in spite of all these headwinds. So we are, in general, in the long run, feeling great about the stock market. In the short run, we just think it's going to be very volatile. We may have a run up in the market. There's just a lot of momentum players out there, but wouldn't be surprised if we have a little pullback. We had almost a 10% correction, if you remember, in February and March. So this is kind of the bigger picture of what we're happening. What we think is happening is the market overall, we feel really good about. Once we get through this period of volatility, we feel like the market will go back to focusing on this fabulous earnings momentum. So that's all I have for you today. And we will talk to you next Tuesday. Have a great week. Bye-bye.